take a look here. Just getting the video ready. We have a copy of the FTX balance sheet, allegedly. We've seen some fake documents before on this stream, so we're gonna look into it using our perceptive financial analysis tools that we've built over careers and take a look and see if it's real or not. But it'd be very interesting to see if we have the real FTX balance sheet. I kind of doubt it, but this will be fun regardless. It's a big Excel file. I'm about to show it to you. For those of you who don't know what I'm talking about, FTX is the crypto exchange and investment company that blew up very dramatically over the last few days. I'm just going to put some stuff up on Twitter that I'm streaming. Just give me one more moment. Really appreciate your time here. And we'll get started. Very good. Okay. Well, here is the file in question. We don't know what's real and what isn't, but it certainly looks formidable. This is in a Google sheet. Looks like it's read-only or something like that, but let's take a look. Not surprised it's read-only, I suppose. Okay. And it appears that this is just one page. So sheet 1. I don't see an ability to go through other sheets. We've got some kind of, I guess these are the people that leaked it, maybe. Or simul capture. Tool, something like that. All right, let's take a look. Token price performance. So this is just the tokens that that FTX allegedly held, which is not going to really give us too much of a picture, right? Ultimately, we don't know the cash the company's held. So this isn't the whole balance sheet. That's the first thing I'd say, is that this is not enough to determine the solvency or insolvency of the company. I have no reason to doubt its legitimacy. What's interesting is you can see that the balance sheet is given by hours. I'm not even used to seeing balance sheets by days, but they close their book every hour, which is a really surprising thing. A lot of the tokens show up at midnight for some reason on the 8th. Not sure why. Can I resize these? It's not resizable, so I'm having trouble even reading the value, but here's some of the value on the 8th. Now this is already after the crisis was well underway. So after the crisis is well underway, they have a bunch of chains here. These might be customer assets. These might not be, I don't know. I don't see very big numbers here. I see a couple million here, a couple million there. This is, I guess, some kind of staked AVAX or something like that. That's the biggest number I see. That's 4.7 million. I see USDC on Uniswap of 2 million. Again, not very much at all. Ren BTC, that's some kind of wrapped Bitcoin, I'm guessing. We got another wrapped Bitcoin for 2 million. We've got DAI of a few million. There's 23 million of BNB, so that looks somewhat realistic. We have another 8 million of Binance's stablecoin, 10 million or 11 million of Ethereum, which sounds about right, or at least more realistic. $13 million of USDT, $100 million of FTX token, a negative amount of FTX token as well, interestingly. $50 million of Lido ETH, or ETH on Lido, whatever that is. I think it's a staking mechanism. 10 million of it looks like either tokens or maybe it could be a number of things on 1inch. They have 20 million of on Aave. 900 million of FTX tokens still. Very interesting. 23 million GMT. Well, that 900 million, so of the total sum, which is about 1.9 billion here on the bottom, that is, which has dropped precipitously, you can see within hours, to 1.3 billion. And let's see if we can look at the other side. Where it looks like they were more like 2.3 billion. And that's maybe pre-crisis. Let's take a look at what time. Midnight on the 7th. So I would say that's pre-crisis. The crisis really was unfolding, but truly started on the morning of the 8th. Certainly wasn't looking good on the 7th, but really was critical on the 8th. And you can see the last frame this balance sheet has, there's a value of 1.3 billion of assets remaining. Now we know that there's an enormous amount of debt, and this does not necessarily reflect Alameda, it does not necessarily reflect FTX, we don't know for sure, but assuming this balance sheet is true, which again, somebody could have just simply made it up, quite possibly, we just don't know what the source is. But assuming that it is true, it appears, let's keep taking a look here, 120 million of USDC. Of that, what was it, 1.2 billion left? And just 270 million of FTX, or FTT token. So that went as a percentage of their balance sheet down dramatically, to the point where it's only about 20% of the balance sheet. And if I could sort this, I would sort this by this column to sort of see what that dollar value looks like. Maybe I could copy and paste it, but it doesn't look too good. 21 million of BNB still, BUSD. A lot of these tokens have dropped in value, as we know. This is Armageddon for crypto. This is really not great. There is a wonderful explanation of what happened on Twitter. I'll pull that up in a minute and show you. Somebody did a little bit of forensic analysis that showed that really what happened was Alameda blew up when everyone else was blowing up, but FTX was able, in essence, to conceal that blow up. That sounds about right. From looking at that analysis, it looked pretty good. So I don't really see where all of that 1 billion is. It looks like 127 million USDC. That's quite a bit. Looks like some wrapped Bitcoin there. I suppose, I trust that this does add up, but again, it's hard to tell at a glance without being able to add it up. I mean, we could do our own quick and dirty of just the very biggest numbers. You want to try that, guys? Think that'd be fun? Let's give it a shot. So Tron, they have 10 million, USDT 7. I'm just going to look at anything 7 figures or above. All right. Sushi 6. YFII 1, YFI 3. XAUT 16, WBTC 24, USDT 79, USDP 12, USDC 127, Uni 19. Let's take a sum of that. 304 million so far, so it probably is right. But the only question now is, what is the source here? Now we know from CoinDesk and Semaphore that the entire, I guess, now are these copied over again? It looks like these are duplicated. Do you see that? So I don't know if that's double counting that. It sounds like it is. Those are the same numbers. Same thing for Uni here. Maybe I counted those twice. I'm not going to count those twice. So let me go down to TUSD. Looks like where we're at. TUSD is 2 million. True is 2 million. Toncoin is 11. Tomo, whatever that is 6. TLM is 18. SXP is 1. Sushi is 2. This is a different sushi from before. STG is 1. SRM is 36. That's pretty big. Spell is 1. SMX is 8. SHIB, good old SHIB, is 8. It should be 0, but you know, it's 8 for now. RSR is 2. Render, one of my favorites actually, 2.5. Interesting that they're in there. I think we knew that they were in there. Ren is 1.9. Reef is 1.5. I heard they were dumping that one. Let's keep looking. All right, these were just transcribed in error, the duplicates there. We're at 408 million just on those, so I think this is accurate. Sometimes I just like to check and make sure that the numbers actually add up. You'd be surprised sometimes that they don't. I remember I was in a deal with Barclays once when they showed us confidential information memorandum and the numbers actually didn't add up, and I was stunned at that. And ever since then, I don't mind actually making sure that, you know, the numbers are what they are. It doesn't take long. And it gives us a good sense, and now we can actually sort this and sort of see what it is, since most of this is just a couple of big numbers. There's a lot of empty numbers here. So it looks like they had a bunch of mana, the Decentraland token, Chainlink, 33.6 million, LDO 7 million, IMX 3.4 million, HXRO 10.2 million, HT, whatever that is, 3 million, HMT 1.1, GT 13.6, GRT 4.3, GOG 2.4, Gods we'll leave out, GMT 22.6, Gala, the Gala Games token, right? FTX 272, EURT 8.3, EUL 1.4. So this is just tokens. Presumably they perhaps as a crypto native company, maybe they didn't have much cash. We don't know. 47 million Ether. Not much for a huge, I know individual people that have more Ether than that. So it's not that much for, you know, for FTX to have just $47 million of Ether. Seems a little unusual, but again, this is an unusual time if we've ever seen one. DAI 8.5. CVX 1.5, CRV, that's Curve, right? CR05, CQT 1.4, CHZ, isn't that Chili's? That's one of the weirder cryptos in my opinion. CEL4, C98 1.1, BUSD 4.9, we're almost done, BRZ 6.6, and we have BRZ. Baba, 38.7 million, huge stake in that one. BIT 2.3, BICO 1.2, BAT, Basic Attention Token, one I actually kind of like. Band, Ape, good old Ape, They should mark that at 0. 1.8 for Aleph, Ave 20.2, 1 inch, 9.7. And here it says, again, utilized. So Lido ETH, 46.4, so maybe that makes more sense. Compound USDT, that's 14.5. Anchor AETHC, 6. Abracadabra, I don't know that one, 28.3. Aave V2, WBTC is 4 million. Let's see. We've got, what is this one? Okay, this is BSC. So what's that, Binance Smart Chain? USDT, 14.5. BSC Ether, 9.4. BSC DAI, 6.7. BSC BUSD, 12.2. BSC BNB, 21.8. All right, we're almost done here. Just about done. SAVAX, 4.2. Uniswap V3, USDC, 3 million, or I'm sorry, 2 million. And ARB WBTC, 2 million. And ARB REN BTC, I forgot what that is. I used to know what the REN is. Is 2.8 million. All right, so what does this add up to? Exactly what it said it would. So that is 1.3 billion of FTX value as of 20 hours ago, 18 hours ago. Let's sort this by column B, largest to smallest. Still FTX, which is the largest. I'm going to delete that because that's what one should do when you see FTX. And it looks like they have $1 billion of these tokens. A lot of these tokens have dropped. I don't see any Solana. I wonder if that is because Alameda had the Solana and they sold the Solana, or they sold the Solana, but that is a big gap here. You would think you would see Solana. Don't know why that's not here. Very unusual. Makes you wonder again if this is a legitimate sheet. Again, I would look for some metadata or something like that. This is a really limited document. It's really unclear what it is. There's no XMR, Monero. So anyway, let's just sort of think about what this all means and how do we think about FTX and what's happened in general. So the first thing I'd say is, without a bailout, and this is really a dark prediction that I don't wish comes true for anybody, but without a bailout soon, I do think they'll arrest Sam Bankman. This is a colossal fuck up. This is worse than Lehman Brothers. This is worse than, I don't know, quite frankly, necessarily, if we've had a fraud maybe this bad ever. Enron, maybe it's up there with Enron, but this is really bad. Binance is said to now have walked away from the deal. CoinDesk has reported that they're strongly leaning. Let's take a look here. Binance is strongly leading towards scrapping the FTX takeover after looking at the books. We don't know how much cash they have. We don't know Alameda's balance sheet. But we do have reason to think that the liability here could be even larger than 6 billion, possibly as much as 10 billion. Now, some of you folks don't know the criminal justice system maybe as much as I did, but we do know, unfortunately, and I'm happy you don't know it like I do. But one of the things that happens in criminal justice is if you try to pitch, so one thing I wanted to add real quick is that this comes from a simul tool theoretically, and I would believe that FTX was using this SYMUL tool. And here's looks like they're still working on Solana integration. It doesn't sound like this is leaked though. If this is just the asset side that was pulled from wallets, I wouldn't say that this is leaked. We don't know, quite frankly, what. We only know the wallets of the two entities. So this guy is claiming that if you look at the wallets of the two entities, without Cosmos and Solana, this is it. Now, I believe that, but we don't know every wallet, and we certainly don't know the bank accounts, right? That I would have to think that these guys had cash. So that's one thing I'd say. Again, Binance is apparently saying 6 hours or 10 hours into looking at the due diligence that they're out. I can't understate how big this is, because it's not just FTX that's in trouble. Everybody connected to FTX now is in trouble. I don't have a position in FTX. I was, we'll not worry about what happened before, but I don't have a position in FTX or Binance for that matter. I don't think anybody has a position in Binance other than CZ and the Chinese Communist Party. But the wallets containing the tokens are just a part of the asset picture. The other part of the asset picture would include wallets we don't know about, and then also cash. There's something up here, and it makes me wonder. There really is a lot of cash missing. And Bankman was asking investors for money. We know this over the last few days. The problem with that is if you do that and you have any material omission, which I can tell you from my own experience, this is what I went to jail for. Any material omission or any misstatement, you can go to jail. That's securities fraud. Now that sounds harsh, right? It is. That means if you're pitching, your company's falling apart, we need $1 billion, and you say, why do we need $1 billion? And you leave anything out. Not even if you affirmatively tell lie, but if you leave something out, that's enough to go to jail. And in fact, that's what happened to me. I had the government had investors take the stand, and they said, "Well, wouldn't you have wanted to know fact one before you made the investment with Shkreli?" And they said, "Yeah, I would have wanted to know that." Well, of course, you always want to know everything, right? You don't want to have anything omitted from you. And they said yes, and that was enough to convict me, even though, correctly speaking, my defense attorney said, well, you made 5 times your money with Martin. What's the problem? And they said, I don't have a problem. But the jury convicts whether or not there was an omission, not whether or not the person has a problem. That's not the law. The law is, did you make a material omission? So in the last week, alone, forget anything else, arguably SBF, Sam Bankman-Fried, made material omissions to these investors. Now, we don't know what he said or didn't say. All I'm telling you, I wasn't in the room, all I'm telling you is that the way prosecutors think is they say, well, in these pitches, did he tell you everything? Now, let's pretend he went to Elon Musk, which I think he did, for financing. He may have said, Musk, I need a $2 billion stat. This is what's happening. There's a liquidity crunch. It's a great opportunity, et cetera, et cetera. No matter what that pitch is like, it's impossible to include everything. And it's very likely he either omitted something by accident, which again, it seems like it's unfair, but life is unfair. I know this as a fact. Any material omission in a pitch is enough to doom you to prison, which prosecutors wield an immense amount of power. They're allowed to pull that card if they need to. And that's what lets government prosecute whoever they see fit. And I think that my guess is Bankman may be arrested within the next week. This is such a catastrophic problem. Unless there's a swift bailout where everyone is paid 1-to-1 on their deposits,
which it doesn't look like that's going to happen, assuming they're out of cash to honor deposits, because otherwise they would have used that cash, if they had $1 billion of cash, let's say, they would have used that cash to pay deposits, and we would have never heard of this. So assume they're out of cash in terms of fiat. The on-chain data reveals they have $1 billion of tokens, which they could redeem investments for or sell for cash, right? But we know they have probably $10 to $12 billion of debt. So the hole here is not 1 billion or 2 billion or 6 billion. It's probably more like 10 billion. And that means that investors, or I'm sorry, depositors, at best, it sounds like, and I'm just speculating here, nobody has perfect information on this, but it seems to me like the recovery rate may be as little as 10 or 15 cents on the dollar, which is a problem. When you take investor money, as I showed you, you can go to jail even if you make 5 times or 3 times, and in one case I think 10 times the investor's money, you can still go to jail if you lied. In this case, these aren't investors who take big risks. These are depositors. Depositors are supposed to be treated with the most holy kind of hands, where they're truly, their money's guarded. These are depositors that are not just going to get made whole and have been lied to. They're going to have been lied to and be made 10 cents on the dollar. You put $1 million in FTX, you may get 100,000 back. You may get $200,000 back. I'm not sure 100%, but I don't think you're going to get $500,000 back, to be frank. And that is a jail term. I mean, I don't see any two ways around it. And it's not a small jail term. I think that's a 20-year plus jail term. So from being on the cover of Forbes as the potential next Warren Buffett to now, in my opinion, and I'm going out on a limb and just making this prediction, almost certainly going to prison, which is really, really frustrating. I don't like to see anybody go to prison. I don't have any bitterness or anything like that. I rather like the old Sam Bankman-Fried that seemed to be really, really good at what he did before some of these revelations came to light. I don't have any ill will against anybody. I really don't think people should go to jail in general unless they're violent criminals. But I do think that's what's going to happen here. I want to show you a couple more things. Principally, there is a very good thread on Twitter that sort of explains and exposes what happened here. I'm just going through our Summoner DAO chat, which is a top secret group I'm in. It's a very good, I also have a photo of Solana's offices at the moment, which are empty, which is quite funny. Let's take a look. So now we know that wasn't a leaked balance sheet. To be clear, my title for this video is wrong. This is just an on-chain aggregated balance sheet. Not leaked by anybody from FTX, although I wouldn't question that getting leaked soon. We're in a more leak environment than we were in 2008. If I was an angry FTX financial professional, I might just say, you know what, everybody needs to see this. Let me show you what's in our bank account. Let me show you what's in, our what assets do we have right now and what liabilities do we have now. That is 10 times more interesting. So if you're at FTX, I don't encourage you to do anything illegal and consult your attorney first, but the world would love to see what is what are the liabilities of FTX and Alameda. So if you're working there, you're pissed off, somebody has to answer for this. That might be something the world wants to see again. I don't encourage you to do it. But all things said, I don't think anybody's going to sue you for doing it either. Let's take a look at this screen real quick. All right, so we're going to look at this from Lucas Nuzzi. This is the head of R&D at Coinmetrics, a crypto security researcher and a Bitcoin OG. All right, I have found evidence that FTX might have provided a massive bailout for Alameda in Q2, which now came back to haunt them. Now, what's interesting about this is in Q2, this is when all the shit hit the fan for crypto the first time. And so I guess what Lucas is pointing out here, and I think he goes on to say this in his Twitter, that in essence what happened to FTX is that Alameda blew up in Q2, and FTX covered it, hoping to work it out somehow. We now know that they didn't work it out. And maybe it was CZ when he said the things that have come to light. You know as well as I do, or at least I can tell you, that in small industries where people talk, employees hop from one company to the other, this would happen all the time in pharma. You know, someone may pick up the phone, and let's say you're working at FTX and you want to impress CZ. You maybe want a job with CZ. You call the phone and you say, hey CZ, we have a problem here at FTX. Oh, really? Well, you know, I came and interviewed there a couple times. You really want to hire me? Well, what do you have? Well, tell me, do you really want to hire me? Okay, I'll hire you. What's up? Well, I just looked at our balance sheet and there's billions of dollars missing. Really? Okay, well, meet me for dinner tomorrow and show me what you can. Those kinds of conversations happen all the time. So I think FTX will be in receivership as soon as tonight, is my guess, is that they'll file for bankruptcy protection. That's sort of pretty standard. That shouldn't surprise anybody. I do think authorities will probably pick up Sam, unfortunately, which I hate to see happen. Really, really sad scenario and situation. Let's keep reading here. 40 days ago, 173 million FTT tokens worth over $4 billion of USD became active on chain. A rabbit hole appeared. So what does this all mean? Let's take a look at CoinMarketCap. These are the remaining cryptocurrencies. There's $800 billion of crypto in total. 300 billion is in Bitcoin, which is pretty rock solid, right? This was created by Satoshi Nakamoto a long time ago. Bitcoin's kind of not going anywhere other than its price, which I think will drop as low as 10 to 12,000 in the near term due to all this chaos. It's at 16,000 right now. I don't know anything special more than any but other trader. Maybe it'll go up tomorrow. It could go to 20,000 for all I know. It could go to 5,000. I have no clue. You don't have a clue either. The market is very hard to predict, and your guess is as good as mine. Pick a random number. That guess is as good as mine. So just keep that in mind. So you've got Bitcoin and you've got Ethereum. So between those two, you've got 450 billion, a little more than half of crypto that is in essence these two really well-known tokens. Then you have the so-called stable coins. To me, I'm not sure whether Tether is really backed by the US dollar. That might be the next shoe to drop. We don't know. But right now, the market certainly believes that every dollar of that $70 billion is backed by an actual dollar somewhere. We don't know for sure. USD coin, people feel probably a little more strongly than Tether that that's the case, and for Binance as well. So there's 60 plus 70, called 130, 140 billion dollars on chain just for those three. How do you think about that? Well, that's up to you. But if we want to take that out as well, now you're talking about, call it 600 billion, maybe 500, 600 billion dollars that's out of that 800 billion. To me, the rest of all of crypto could be a zero. It's built on speculation, it's thin air, and there's no reason why it can't go to zero. We don't know what will happen. I'm not saying that's what's going to happen, but I would put that as a possibility. I do think things like Dogecoin and things like Shiba are probably completely zeros. We've seen Solana drop from the sixth biggest crypto to now the 15th, as it's plummeted from say 35 when I shorted it to 213. I think Litecoin is a zero as well. That's a whole other story. So we've seen a lot of these cryptos fall in price. That's not what I'm here to talk about. What I wanted to talk about is these exchange tokens. So we have BNB, which is backed and created by Binance, right? So this is an exchange created, sort of exchange company's token. In fact, USD Coin was somewhat created by CoinDesk, but CoinDesk does not have a CoinDesk token. Kraken does not have a Kraken token, right? So it was a little unusual for Binance to have not just one token, but actually several, and then FTX decided to have a token too. So now the total market value of FTX token is not a lot. Let's actually see if we can, there it is, number 76, it's 400 billion. It's as big as some fairly specious, let's just say, tokens. Some of these tokens aren't worth a whole lot and kind of are suspicious. And FTX token has rapidly gotten to that price. It's at $3 now. It'll probably be lower. It's dropped a lot since I recommended shorting it yesterday at $18, which was an unbelievable opportunity. But anyway, we'll see where FTX goes. But I just wanted to show you that there aren't that many exchange tokens. A lot of these tokens are utility tokens that do something specific. There are a couple of exchange-like tokens or DEX-style tokens, but CEX or CEX, centralized exchange, not the CEX that you and I think about, and the one that I have with your mother, but the centralized exchange. So anyway, let's get back to this. A rabbit hole appeared. So he keeps going on to say, that day, September 28th, over 8 billion worth of FTT was moved on chain. Now, to me, what's weird here is the September movement, because if the bailout occurred, presumably that bailout occurred in either US dollars or something else, but there's no evidence of the bailout that's being provided here. If the bailout happened in Q2, because of the contagion that occurred in Q2, right? When did Celsius go bankrupt, for example? July 14th, sort of early Q3, right? And then let's look at 3AC bankruptcy. Looks like July as well. So basically late Q2, early Q3. So that's the theory, is that that was around the time when the theory that Alameda started having trouble and FTX bailed it out. So it's really unclear kind of what exactly is happening here and how it got bailed out. But here's the evidence, at least, of what happened recently, which is on September 28th, which is just about a month ago, a month and a week or two. $9 billion of FTT was moved on chain, and you can see that here with this chart. That was the largest move of FTT in the token's existence, and one of the largest ERC moves, period. So here, I went through all transfers that happened that day using CM Atlas and ranked them. I found a peculiar transaction that interacted with the FTC ICO contract. It released 173 million FTT from the ICO. Okay, that's quite a lot. The recipient of the $4 billion FTT was Alameda. Well, why would that happen? Well, Alameda then sent all of that to the deployer, which is FTX. So it seems like there's some weird vesting thing where there was possibly a vesting that broke, basically. That maybe that wasn't on chain, that it was just supposed to vest over time, but they just took it. So here's the speculation. Alameda blew up in Q2 with 3 Arrows and Celsius and others. And it survived only because they used funding from FTX with this FTT as the collateral. The FTT ICO contract vests automatically. Had FTX let Alameda implode in May, their collapse would have ensured the subsequent liquidation of all the FTT tokens. It would have been terrible for FTX, so they had to find a scenario. This is a really good piece of detective work. The timing makes sense. They put all their chips on the table in Q2 and used that cash to bail out others, or bail others out. And this tried to solidify the image as a solvent and responsible institution. Then, of course, we have the political moves. The bailout likely put a dent in FTX's balance sheet to the point where it was no longer solvent. This would have been fine if the price of FTT didn't collapse and a bank run ensued. That's why Alameda tried their best to protect FTT's price, including buying out all of CZ's tokens, which CZ decided not to take, the $22, I'll buy it all now, which is what Caroline said. Caroline is the CEO of Alameda, or was. I don't think Alameda is an institution any longer. Here is where things get crazier. There's a chance the folks from Binance knew about the arrangement between FTX and Alameda. I would imagine they did. And the opportunity emerged, so they basically decided to tank the market to force FTX into bankruptcy. This rescue thing, I think, was mostly just you know, a ruse. And so we don't know exactly what happened here. Now, we do know that the FTX US president left. We do know that the Alameda people left. A lot of people probably did not want to be on board with this transfer. And so a lot of those people who left said, I'm not doing this. I'm not going to be around when the evidence comes out that I was here and I sanctioned this, in essence. So we also see that Voyager had a bunch of FTT as well. So there might have been a thought that they could bail them out to try to sort of keep Voyager from dumping FTT. Apparently, we see a lot of lies. And in fact, Sam Bankman also deleted certain tweets, which is really, if you know anything about criminal justice, the last thing you want to do, ever, if you're committing a crime or whatever, the worst thing you can do is delete a message or delete an email or conceal something. That is the death knell, because that is what some people call mens rea or scienter. It is a state of mind of guilt that you shouldn't have said that. Oops, let me delete that. And remember, Bankman said yesterday, FTX is fine, right? FTX is all good. There's nothing wrong with FTX. He lied. He probably knew that that was not true. He was probably at the same time begging Silicon Valley for money. That is fraud, unfortunately. Again, it's not my opinion of what should or shouldn't be fraud. I have different opinions about that. It is the law at the moment. And again, I don't necessarily agree with the exact implementation of the law and this and that, and that's an academic discussion. What we can say, though, is that when you lie and you're dealing with lots of people's money, even if my hedge fund was very, very small, I had only a couple of $1 million, or less than 10 million, we'll say that, of partners' money, and still ended up doing 4 years. So we're talking about tens of billions of dollars here. And now it's gone, from what we can tell. I mean, this guy painstakingly added up every wallet known to be Alameda's wallet and FTX's wallet, and this is what's left. Some FTT token, which is worthless, not even include that. This stuff, which is a moving target, and which, you know, last prices, which are dropping as we speak, it's worth 980 million bucks. And we know that there are people that probably have something close to that deposited on FTX, thinking it was secure. Let's take a look at what Coinbase's deposits are, shall we? They're a publicly traded company, so we can actually examine what their customer assets are. I'm just going to sec.gov, and for any of you who watch my live streams regularly, this is basically what I'm really good at, the one thing I'm good at. I'm not good at chess or video games. If you suffer through watching me try those, I'm terrible at those, but one thing that I am, I think, decent at and known for is surfing through these filings. So let's take a look at these Coinbase's latest 10Q. All right, $5 billion of cash. That sounds more like it. Customer crypto assets, $95 billion. Wow. Think about that. That's crazy. They have $95 billion of customer crypto assets? That doesn't sound right. Let's take a look what that means. Yeah, customer crypto liabilities, $95 billion. That is the customer's money. They have it on their balance sheet, just like a bank does. It's called deposits in the case of a bank. If you look at JP Morgan's numbers, they look like this, but bigger. And then you have it as a liability too, and it's the same amount, right? And then they have a little bit of cash. And that makes sense. Most of the assets are in crypto. So can you imagine how much money FTX has in customer assets? Now all that's left is this $1 billion. I mean, I don't know what Coinbase's market share was versus FTX. I wonder if we can look that up. I know Binance is the biggest, but let's take a look at the market shares. There might be an image here that works. I'm looking for like a little pie chart basically. There we go. Looks like Binance is the biggest, Coinbase is the red, and this green thing is FTX. It's almost the same damn size. So how much of this money is missing and where the hell did it go? To me, to halt withdrawals, right? To halt withdrawals, you would not be, okay, so let's say I was the CEO right now, right? And I had this going on, this situation, and I had this balance sheet. And one of my assistants handed me the new balance sheet and it said, Mr. Shkreli Bankman-Fried, Shkreli-Fried, the customer crypto assets have dropped because they want their money back. So, okay, well, how much? Well, they want half their money back. I could actually give them half their money back even though I messed up, say, the other half. The only time a bank run happens is when there's literally not enough money to meet the customer's redemptions, right? So to me, this is really kind of fucked up. Like, where is the customer money? It doesn't add up. Losing a couple of $1 billion shouldn't be enough. Shouldn't be enough. Just getting some messages here. It shouldn't be enough to actually cause a run, right? I mean, if Coinbase has 95 billion of assets and they have the same market share, right? We just saw that, the same market share as roughly as Binance, where the hell's the money? And you can see they keep cash as well. So presumably FTX used all their cash. That's what I would do. If I was the CEO and I was in this emergency setting, I'd say, you know what? Let's use that cash. Let's use that. And again, you could replace Coinbase here with FTX, maybe knock the numbers down 20% or something, 30%, I don't know. But the chart we just looked at said they're roughly the same sized company. And they, as far as I know, they have the same business model. And as far as I know, Coinbase doesn't have a prop desk like Alameda, so there should be even more assets and more debt. And they were playing this sort of shell game to sort of move things around. But if you look at the customer crypto assets of Coinbase, it's this very big number, and the cash number is very small because they just take the customer assets. The customer wants to exchange them. They do that sort of off balance sheet and rapidly return the money. So there's no real risk for Coinbase. They, of course, take a fee for doing that, and that's where the income statement comes in, right? Here's their revenue. It's very small, right? It's 500 million relative to the huge amount, and of course it's dropped a lot due to the crypto market, but it's relatively small compared to the customer assets, and that makes sense. The customers have $100 billion with Coinbase. Why wouldn't they have a similar number? Okay, even if you say FTX is a quarter of the size, which we know isn't even true, FTX is a quarter of the size, $20 billion. They're saying you can't have any of that. And this guy who just did this forensic analysis says there's a $1 billion left. Does that mean there's $19 billion missing here? I think they're going to put this guy under the jail. I mean, I think that this almost reminds me of a Bernie Madoff situation where if you looked at what happened with Madoff, what's really interesting about that is he started with, say, 10 billion or 20 billion of actual cash. He pretended that there was 60 billion of cash. And the people spent their money thinking they had $60 billion of cash. They didn't, right? They had far less. And so when he revealed the scheme, it turns out that there's only $20 billion of cash. Now that sucks if you were spending it thinking you had tripled your money or more, but there's actually still $20 billion of cash because nobody can spend. I'm a frugal guy, but even if you were the biggest spender in the world, you spent money like Puff Daddy or Jay-Z or 50 Cent or someone like that, you're a profligate spender, you really can't spend that much money. It's hard to make $10 billion disappear or $5 billion disappear. You can do it in financial transactions, but just luxury spending and stuff like that, it's virtually impossible. So my question is, where are the customer assets? Because if it were me and customers withdrawing, I'd just give them their assets back. But something else much fishier is happening here, because otherwise, I think you would see something different. I think that my guess, if I had to take a random blind guess, and yesterday my guess was that these guys were taking money and putting it into Aptos's deal, SWE. I think some of you might have been here yesterday where I said that. Well, that's what happened. It's true, but I don't think that's what caused this. How much did they invest in those companies? 50 million here, 100 million there. That's not what caused it. I have friends who got money from FTX's venture arm. That's definitely not what caused it. We also know that the most amount of money FTX ever raised was 1.8 billion, right? That's all the equity financing they ever raised. The profits from their business couldn't have been that big, right? They look at Coinbase, right? Coinbase didn't even turn a profit, right? So Coinbase struggled. Coinbase had negative cash flow, right? Quite a lot of negative cash flow for a while. Now, you can see they had quite a lot of positive cash flow in certain years, and I'm sure FTX did as well. But my guess is Alameda may have made leveraged long bets in crypto. And I'm talking not about little tokens and things like that. I'm talking about Bitcoin and Ethereum. That's the only explanation I have for how do you lose 10 or 20 billion dollars, right? Where would the money go? I assume, again, that Coinbase and FTX have similar business models and similar balance sheets. If I'm right about that, the syllogism is ironclad that a lot of money is missing, a lot more than $1 billion or $2 billion or whatever. More like 10 or 20, or possibly even quite a lot more, again, if we look at the customer crypto assets. Now, I don't know exactly what the customer crypto assets for Coinbase look like, because it looks like a moving target here, but there's still quite a bit of money. Let's take a look, if we can, at maybe some of the other Coinbase balance sheets, and why did it sort of seem to balloon a bit? Like, where was it in Q2? And obviously, financial balance sheets are the hardest balance sheets to understand at all. And they may have not held them. Oh, I think I know what happened here. Yeah, I remember this. Coinbase decided to finally put the customers' balance sheets on their balance, the customers' balances, their assets, on the balance sheet. But previously, they had not done that. So that's where those customer assets are. And again, we can kind of think about Coinbase as a proxy, right, for FTX. And even if that syllogism is sloppy, and that Coinbase is so much bigger than FTX for some reason, maybe they have more institutions or whatever, and I think they do, that FTX only had $25 billion in customer deposits. Where are they? We should be able to find them on chain. We should be able to think about them being in a bank. We see that Coinbase's ratio of cash to crypto is like 5%. So even if FTX has $1 billion of cash, which it doesn't sound like they do because they would have used it to honor withdrawals, then where is that money? I think there's something really, really fishy going on here. Either the money was absconded with, which again, going back to Madoff, they found all of the Madoff money. If you don't know that part of the story, you might just know that Madoff was this big crook or something like that. Certainly true. But Madoff himself, he could not spend enough money. Even though he lived, again, a profligate, wild, flamboyant life, you could not spend that much money. You really can't. I'll just say before prison, I spent probably about $1 million or $2 million a year, and that goes a long way. You can have an enormous amount of fun in life in that. I'm just relatively frugal. I think the people that I know that spend $5 or $10 million a year on their own lifestyle, I'm talking about private jets, chauffeured cars, fancy dinners, nightclubs, all the wild expenditures that maybe you think Dan Bilzerian or someone like that does. $5 to $10 million get you a pretty fun life. Not many people spend that much money, even people like Jay-Z or Beyonce or so forth. It's hard to spend $20 billion on fun stuff. I would argue it's impossible. So if the syllogism holds, where's the 10, 20, $30 billion of customer FTX assets? We only see 1 or 2 billion on chain. So they either lost it all or somehow absconded with it. And I think I've shown that you can't really spend and abscond with that much money. You could try to steal it, I guess, and hide it somewhere, but ultimately they'll find it and it'll be back to the depositors again, which is what happened with Madoff, right? They were able to actually pay 30-something cents. In fact, in cash recovery, I think they recovered 90% of the Madoff cash. He spent 5 or 10% of it. But the problem with the Madoff thing is he told them that their money multiplied, and a lot of people were very upset to hear that their money in fact didn't multiply. It was just sitting in it was just actually just sitting in a bank account. So that's my point here is, where is the money that's just sitting in the bank account here? I just pulled up JP Morgan's balance sheet, which you can see has trading assets, which is kind of like the cash they have, the loans, that's an asset, and then the liabilities, which is the deposits. So the customers have $2.4 trillion deposited in JP Morgan. On the flip side, that's money that the JP Morgan owes its customers. That's why it's a liability. You kind of think of a deposit as an asset, but no, in banking, a deposit is a liability because you have to give the customer back their money when they ask for it. So you are liable to the customer. On the flip side, of course, they have the loans that they used the customer's money to make. They have a bunch of stocks and a bunch of cash, right? And that the two roughly balance out, right? They have, if you take an eyeball here, it's about 2 point something billion here and 2 point something billion there. Trillion. Very big for JP Morgan. And again, when we looked at Coinbase, you saw the same thing. They had crypto assets and they had the exact dollar amount of crypto assets on the other side of the balance sheet. And remember, Coinbase is audited. It's SEC registered. It's got all the securities laws that apply to it. And it appears they are telling the truth that every dollar worth or every token of crypto is on the balance sheet as a deposit, and it's on the balance sheet as a liability and an asset. So it matches perfectly. FTX didn't have that. So I think there's a lot more money missing here than anybody knows. Somebody told me that Almeida's website, Alameda Research, has been deleted. I'm going to check real quick and see if that's true. Oh! Whoa! It is true. That is fascinating. When the shit starts to hit the fan, I like to take a look at some of this stuff. So let's see. This was registered a while back. Man, registered in 2017. So that's when the website was registered. Let me see if they ever filed a Form D. No findings. No. Okay, let's try FTX. Let's see. We could try that. So they did file a Form D. Antigua and Barbuda is FTX Trading Limited.
Looks like they sold $415 million of equity. Mr. Bankman-Fried signed the document. Let me take a look at Crunchbase real quick. But anyway, I mean, I think that there's more money missing here than we thought, and that's the real rub. If you have money with FTX, my condolences. It's really frustrating, I'm sure. Here's what Crunchbase has to say about FTX. So this is the funding. It looks like this is when they raised that Series C. That was 400 million. That's the document we just pulled up. We'll see the people who invested in that. They're basically toast. Use a technical financial term. That's a zero. Now these are big funds that mostly that will survive. Temasek, it's not going to end Temasek, which is the Singaporean wealth fund. They're going to be fine. SoftBank will be fine. It's certainly not a good thing for some of these other funds, though, that are going to take a hit here. Again, Ontario Teachers Pension Plan will be fine. They have hundreds of billions of dollars. The 20 million that they sunk, or whatever the number is, into FTX, it's not a big deal. The bigger deal is that this is going to kill the appetite of firms like that who wanted to invest in crypto, who wanted to dip a toe, right? If you don't know, if you're not from finance, you don't know that there's two big funds in Canada. There's CPPIB, Canadian Pension Plan Investment Bureau. I have a lot of friends who work there, great firm. It's kind of like a hedge fund almost, huge fund. And then there's Ontario Teachers Pension Plan, and there's a couple of others as well that are state managed, basically kind of like hedge funds. And it seems weird that they would invest in this, but they have a very, very, very small part of their capital is this venture, and they've done well with that. And a very, very small part of that might have invested in FTX. And they even were quoted as saying, "Oh, this is going to be the safest crypto investment that we could sort of dip our toe into." So they dipped their toe, and unfortunately, what crypto kind of needed was people like JP Morgan to come in, Goldman Sachs, firms like that to say, yeah, you know what, this is the future. I want to do this. And the firms like that, like Ontario, like Temasek, these other guys, they're VCs. They take risks. They're basically degens, right? They're taking big risks. Even a firm like Tiger, even a very staid VC, relatively staid VC like NEA, they take risks. They get zeros all the time. It's not a big deal. Temasek, Blackstone, and Ontario, they don't take zeros, right? They make real late-stage investments that are really legitimate. And now they're looking at a donut, and this is not what crypto needed, right? Crypto needed the opposite. Needed Blackstones who have $1 trillion of assets. They needed the Goldman Sachses, the JP Morgans to come in and say, you know what, we'll try this out. Let's throw some money in. They're never doing this again, right? Never. It's going to be 10 or 20 years before Blackstone, BlackRock, CPPIB, any of these guys say, yeah, we want to be in crypto. Macquarie Bank, all the sovereign wealth funds, they're going to say, yeah, no, I'm not doing that. Fuck that. And the problem is that to sustain this most important thing, which is the aggregate market cap of crypto, which is $840 billion, you need new buyers. Why do you need new buyers? Because these assets are created out of thin air. These are computer programs. So to sustain this, right? This is crypto. This is the peak when it was $2 trillion. And this is now. It's still $800 billion. That's still close to $1 trillion. That's a lot of money. $1 trillion is still a lot of money. Is it enough to cause a financial contagion or a recession? Maybe. Probably not, but maybe. You can see when crypto was a baby and was only 100 billion, which is still not a small amount of money. Actually, let me take a step back, because in 1998, long-term capital management blew up. It was a hedge fund called LTCM. One of the best books ever written about this business is called When Genius Failed, and it used to be required reading if you wanted to work for me. I would say still is. And it's about, the general sense of course, no matter how smart you are, it doesn't mean you're going to be good at investing. It doesn't mean you're going to make a lot of money. And if you look at the top
billionaires of the world or whatever. Some of them seem pretty smart. Some of them, like Mark Cuban, don't. But ultimately, if smarts is what made you rich, the smartest people in the world would be the richest people in the world, and they're not. There are plenty of people like Cuban, plenty of people like that aren't that smart, and they're just sort of, there's an old saying, better to be lucky than good. And it was Jim Cramer's favorite saying. So this book is about a hedge fund that thought that they could rule the world, and they had a lot of really smart people working there, really strong people working there, and the firm blew up. Now this fund only had a couple of $1 billion when it caused a blow-up so big that the Federal Reserve had to meet to bail the fund out. That's how bad it was. Crypto is a lot, and FTX specifically, but all of crypto is a lot bigger than that, right? It makes LTCM look small. So if this $800 billion that we created out of thin air has no new incremental buyer, right? That's the problem, is that the Blackstones of the world aren't saying, Bitcoin looks cheap, I'm going to buy some Bitcoin. That's not what they're saying. They're saying, this paper money thing that you guys tried to sort of like float out there, this computer program money, this database entry money, this is crazy that anybody thought that I'd be interested in this. These are conservative people to begin with. They're not saying like Microsoft went from this price to that price. This is more attractive. Microsoft's cheaper. That's the way a stock investor thinks. This is a crisis of confidence where you can't even think about this as being legitimate anymore if you're at one of those state institutions. I personally think crypto will survive and come back hopefully even stronger. But if you're an institutional investor or a bank, you're not looking at this saying, oh, this dip, buy this dip. You buy the dip of things that are real. You don't buy the dip of things that are created. Like I can sit here and create 1 billion tokens tomorrow, 1 trillion tokens. Here, they're worth something, right? No. Now the stable coins are different. The stable coins are backed, theoretically at least, by dollars. But Bitcoin, you can copy and paste the Bitcoin protocol. You have Bitcoin 2 right there. Bitcoin 3. You can run a Python script to make 60,000 Bitcoins in a minute. Does that mean they're valuable? No. They all have the same properties as the original Bitcoin. We're just sort of agreeing that they're valuable. Now that's what fiat is too. But here's the problem. You need incremental buyers. You need the next person to go take the Bitcoin off your hands at 17,000 or whatever the current price is. 16,950. You need somebody to say, okay, yeah, I'll buy that Bitcoin for 17,000. And you've just eliminated most of the money in the world. This FTX saga, scandal, fraud, whatever you want to call it, situation. Basically, it now says, all these guys they're shutting their door. They're going to slam their door and say, nah, I don't want to hear about cryptocurrency. I don't want to hear about this bullshit because I was probably the average person from the institution. They're going to say, I was skeptical of this shit before. I was starting to warm up to it because everyone was talking about it and it sounded okay. But nah, there's no way, right? And that's the way I think your average institution is going to look at it. It doesn't mean a firm like A16Z, which is a great firm. It doesn't mean like a firm like Paradigm, which is a great firm. They have billions of dollars, but that's not really what I'm talking about. I'm really talking about, they'll still believe in crypto. I'll still believe in crypto. But for that 800 billion to go up, you need somebody else to believe in crypto. You need the big boys to believe in crypto. The 2-point-something trillion dollars that we just saw on JP Morgan's balance sheet. We just need a piece of that. And now you're going to see Jamie Dimon walking around saying, told you so. Told you so. This is all fucking house of cards, smoke and mirrors. And Warren Buffett right now is kicking his feet up right on his desk saying, yeah, well, I warned him. 90 years old, I've seen a lot. Get me a cherry Coke over there. I told him. And Warren Buffett said he wouldn't trade $20 in his wallet for all the crypto in the world. And maybe it's starting to look right. Now, I think crypto is one of the most important additions to software. And if you listen to my post-jail kind of coming out party where I did a webcast, I said that it's just a new form of software. There's nothing magical about crypto. It's just a new tool. It's not that different from reactive web development. It's not that different from probably the paradigm shift that object-oriented programming provided. It's not that different from the shift of, say, the new opportunity in NoSQL databases. When we were using SQL for a long time and said, oh, let's use document-based databases, NoSQL. And you didn't have Super Bowl commercials about that, right? You didn't have a Super Bowl commercial when Rust came out, the programming language, not the video game. You didn't have a Super Bowl commercial when React came out. For me, it was like the Super Bowl, because I thought Facebook, I'm talking about Facebook's React web development framework, it changed the web. Every website that's cool that you see now is built on React. It was amazing. But Facebook didn't take out a Super Bowl ad and get every other person on the street to learn what an NFT was, or how React components work, for instance. You don't even know what React is, most likely. So, or certainly the average person does. But the average person does know what crypto is. They've heard of it. They've heard of Bitcoin. So we've taken a good idea, a new tool in the software development armamentarium, and we made it this gigantic mastodon, this leviathan of epic proportions. Why? It's just a software tool. It's a good software tool. It's a revolutionary software tool, arguably, but it's still just a software tool. Some people who make fun of Bitcoin say, oh, it's a slow database. That's more or less true. It's pejorative. It's not exactly right. I mean, there's better things in Bitcoin than just being a slow database. But it still is software, and we've elevated this to such epic proportions where people have said that Bitcoin's the most important invention in the history of mankind. I think it's a software tool. It's a really good software tool. Software is probably the most important invention in mankind's history. This is just one piece. Zero knowledge proofs, one piece. Distributed ledgers, one piece. What is it good for? We're finding out. When the internet came out in 2000, I was 16 years old. The internet came out before 2000, but when the internet came to Wall Street, it was around 98, and I watched it from home. I convinced my father to open me a stock trading account with $2,000, which for our family was not a small amount of money. And we opened an E-Trade account in 96. And I would trade stocks and watch CNBC like I was, a little hedge fund trader. Then I met Jim Cramer. I was 16, and I worked at his hedge fund. And I was 16 watching the stock market with these stock screens, and everything was wild. And the internet was just coming out, and people were saying, well, what is this good for? What are we going to do with this thing? It's great new software, great new technology. How do we use it? Nobody knew. Some people thought one of the hottest things was called B2B. And there were these huge B2B companies that said, we're going to aggregate procurement power, purchasing power, and we're going to use that to save the whole world money. We're going to match buyers with sellers and producers, and it's going to revolutionize business. Never happened. The B2B networks like Ariba went bankrupt. Those stocks were the highest flyers at the time. People said, oh, this is what the internet's good for. It's going to allow this communication of these networks to allow that to happen. It didn't work out. Then some people said, what's going to be big on the internet? Media. Media is going to be huge. People are going to watch TV on the internet. People are going to communicate on the internet. And yeah, there were some companies like that. You wouldn't have heard of half of them because they all went bankrupt too. Yahoo was one. That was pretty big. That sort of stuck around for a little while. But there was no Facebook. There was no real Google back then. But these stocks were high flyers, and they all crashed and went to zero, just like crypto is doing now. Of course, the point of the story is that the internet was still a really important, arguably the most important revolution ever, and crypto still might be that. But it doesn't mean that all those coins on that coin market cap list I just showed you, most of those are worthless. Most of them will be worthless. So if you think your Solana or your Cardano or your whatever is special, it isn't. It's not special. It's not going to survive, most likely. One of those, or two of those, or 10 of those will survive. The next survivors are going to be generation 3 or 4 or 5. How many original internet companies survived? Well, Amazon, eBay. So of the top 10 sort of internet companies, most of them came in that next generation, right? Where people looked and saw, people like Mark Zuckerberg, saw, okay, I see how Yahoo's fucking up. Let me fix that. Let me do it better. And they leapfrogged them. Even Google, that saw the first search engine, said, we're going to learn lessons from this. And we're going to fix it, and version 2 is going to be better. And I think that this cycle of crypto, whatever you want to call it, is going to teach a lot of lessons for the next entrepreneurs. Maybe that'll be me. Maybe that'll be you. Maybe it'll be someone who hasn't been born yet. Maybe it's someone who's 7 years old right now. I don't know. Zuckerberg was probably like 5 years old when the first internet bubble was bursting or whatever. Maybe not quite right, but he was probably a teenager at the least. So the point is that, we don't know where crypto is going. This is not a good thing. As I was saying yesterday, this is a disaster. It's going to eliminate the marginal buyer. You might say, well, the marginal buyer is the guy who sold Bitcoin at 60,000 and now he's got cash, so he's going to buy it at 16,000. Yeah, maybe. There are people like that. Maybe Kobe, who I was on his venerable show yesterday. Maybe some other whale that sold all their Bitcoin at 60,000 is going to buy it at 16,000. That's not enough. That's not enough to stop the tide of miners who will sell, right? Miners trade computer power and they get tokens in essence for free. They mint them and then they sell them. That is supply. That is natural supply. That supply has to be absorbed by a buyer. The buyers are gone. The only people that still believe in crypto, like myself and others, they either don't have any capital left, they're fully invested, or very quickly whatever capital they have left will be absorbed by the sellers. So I think we're going to see a lot more carnage before we get better. It doesn't mean crypto is going away. It doesn't mean I'm going to stop paying attention to crypto. But again, crypto is just software. I think we have to stop thinking about it as special. It's no more special than the front end. What a lot of people say is the UI, the UX, the experience that software users actually see and touch. It's not more special than middleware. And it's not more special than the back end or a database or whatever. It's just another tool. Can you use this tool to make things more productive? Can you use this tool to make things better in a number of ways? I think yes. In fact, I'm willing to bet my career that the answer is yes. But that doesn't mean that all the money is going to be replaced by this. It doesn't mean that the best use of crypto, and when I say crypto, I mean all of these technologies. It's not just one thing. It's not just distributed ledgers. All of this suite of technologies, which has this name, Web3 or crypto or whatever, just the same way that a lot of the reactive web or whatever you want to call it, Web 2, is not one technology either. It used to be things like Ajax or long polling or all these old web technologies that made the web feel alive as opposed to a static HTML document. That was a suite of technologies. This is a suite of technologies. I don't see anything wrong with the name Web3. I don't see anything wrong with the name crypto. It's simply semantics. But this suite of technologies is going to change the world. But where, why, when, and how, we don't know. Bitcoin was the first kind of like, hey, this is going to change the world. But we don't know if Bitcoin is Yahoo, Google, eBay, or thevillage.com, or theglobe.com, or some of these pets.com, what are some of the funnier ones that we used to short? CMGI, Internet Capital Group. CMGI was the first professional trade I was involved in, where we shorted stock of CMGI. If you want to blast from the past, you can look at what CMGI was. It was an incubator of internet companies. It did not go well. The Internet Capital Group was a similar one. The point is that, most of these are going to disappear. And from those ashes, there'll be some really strong entrepreneurs who, maybe that's Binance, I don't know. Maybe that's Ethereum. Maybe that's a company like, I don't know, one of the crypto investment companies or another software company. Maybe it's Coinbase. I have no clue. But there are going to be some entrepreneurs that rise from these ashes. And some of them, like look at Zuckerberg, who rose from the internet ashes. He didn't even know there was an internet bubble burst. He didn't care. He just programmed. He and his friends made a cool website. And I think that's never going to stop. You're never going to be able to stop that. Are you going to flush a lot of this extra money out of crypto? Yeah, it's going to flush out. There's going to be people who, this is what happened with the internet, by the way. In 2004, you can imagine a bunch of guys at a bar like this. Internet. Don't talk to me about internet. Maybe there's Zuckerberg with his fake ID. He snuck into a Harvard bar. He's saying, no, I look up to you. You're an investing legend. Just give me $5 million for my new internet company. And the guy's looking at him like, kid, I lost $1 billion in the fucking internet. Now get out of here. And that conversation probably happened in many ways when the 2002 was the trough of the internet bust, that these companies, and again, some of you, I've even talked to people, it's 2022, it's been 20 years. I've talked to people who don't even believe me, who said that never happened. Trust me, it happened. In 2000, 2001, 2002, the internet was a dirty word when it comes to investors. We're so inured to the internet that we can't think that that's even possible. Imagine being early in the internet. Okay, you would have bought theglobe.com. You would have bought thestreet.com, Jim Cramer's former website, or current, I don't even know what he's doing with it, but you would have bought marketwatch.com. You would have bought, you might have been lucky and bought amazon.com. But amazon.com dropped 90% in that internet bust anyway. So you might have been cursing that regardless. If you're smart enough to hold on, you would have done well. But most of those stocks dropped 90, 95%. It was Armageddon. It makes this crypto bust look like nothing. That was bad. You had companies that laid the groundwork for the internet, like Cisco and Global Crossing. Those stocks went down 95% too. Bubbles are bubbles. You can't really, fix them. So I think the punchline here is I think there's a lot more money missing than is being let on. I think the number could be as much as 10 or $20 billion, which I hope it's not. I hope I made, like I mentioned earlier, a sloppy syllogism. I gave you the points that I made earlier. This video will be uploaded, of course, where I'm making this syllogistic leap from Coinbase's SEC filings to FTX's. I could be wrong about that. I'd have to be an order of magnitude wrong, though, and I don't think I am. But I hope I'm wrong. I don't want FTX to have lost 10 or $20 billion of customer assets. So I think I've said what I have to say. I have to get to some documents and stuff like that. If you're new to my channel, basically I talk about 2 or 3 different things. I do financial analysis. That's kind of my bread and butter. I show people a mix of teaching and practicing. I mostly do practicing these days, where I just go through SEC filings and come up with financial models where I try to predict the value of a company. And I do that in biopharma. Here, I'll show you some of my tools and data, give you a quick overview of what it is that I do for the internet. And I do this for free, and I upload all these files and work pretty tirelessly just for the viewers. So I just upload, do financial models, and I upload them. They're on a website called GitHub, which is a software website that allows you to share and store files. So GitHub is a really, really amazing tool. My GitHub is github.com/Martin Shkreli. There's some fun other repos like Trap House, different scrapers and things that I've made over the years, but mostly this stores my financial models, which you can download for free and kind of edit or do what you want. So you take a company like Pfizer, and you can see, well, right now I'm pointing at the wrong directory, but if you take a look at these files, which again, they're on, sorry for that. They're on these, they're on the GitHub. You can sort of examine some of my financial forecasts and kind of what you think and I think and all the data that supports them. And I come up with sort of a number for what I think companies are worth and things like that. And I used to have these, I didn't have them available for sharing, but before prison, I had these in tip-top shape. I just got out, so I'm still updating some of my models. But regardless, those files are all shared. So I do a bit of that where I don't really explain it as much, but I just do it. And then I sort of do some tutorials on how to do that, how to look at SEC filings, how to dive through them, and how to get to the conclusions that I get to. I'm a so-called value investor, a deep value investor in a way, but I show some other methods of investing that I've picked up along the years. So that's mostly what I do on the financial side. Again, I read SEC filings, do things like that. I play video games. It's sort of a vice. I play Fortnite and things like that. I play very poorly. So that's not something that a lot of people like, but I do it anyway. And then I do all kinds of other fun stuff. So I program sometimes. I do all kinds of silly stuff here and there. So anyway, I also play chess very poorly, so I'm going to do that right now if anybody wants to challenge me to a game of chess, and then I'm going to wrap it up and call it a day. Thank you so much for watching. Please subscribe, watch other videos. I also do a little bit of scientific work in chemistry and cheminformatics and bioinformatics and stuff like that. I'm going to mention real quick, I'm involved in 2 new projects and companies. The first is called
drug-like or DL software, and it's a suite of software that does various cheminformatics tools for use in a variety of different settings. You can check that out at druglike.com. Companies doing, I think, really important work. This is the demo. If you haven't seen this, this is a protein. This is what the whole fuss is about protein folding. What a lot of people don't understand about protein folding is that, and again, this is the React stuff that I was talking about that's so revolutionary. If you look at how these proteins work, or how this website works, it feels like a desktop app. It really isn't kind of incredible. Let me make sure I don't lose my chess game here. So you select your protein, which is usually shot with an X-ray crystal and determined scientifically, empirically, but you could also use this new AlphaFold software and stuff like that. So anyway, once you have your protein selected, you select sort of a grid box that determines what site in the protein you want to sort of screen potential other compound for, and then you can select compounds. We have a lot of compounds in this. 60 million or 100 million, I think, compounds that you could test, and that's going to go up to billions of compounds. So the demo is free. Doing this screen would cost you $600,000. I don't recommend you do that, but you can actually do a demo for free here, which is the first time this kind of software has ever been offered for free. The front end is completely free. There's no license fee. Our rivals charge $50,000 for a license fee, which is really crazy. So you can actually screen, this is a screen of just under 1,000 compounds. I think you can screen up to 10,000 compounds for free, and we're actually planning on bumping that a bit to allow more people to do this. So you can actually do the same research work that Pfizer and Merck and companies like that do for free on our platform, which is really crazy. It's the first time that's ever happened. Our rival software is $10,000, or $50,000, excuse me, a year. Some of them are a little cheaper, but the main rival is $50K, which is quite expensive software. And that doesn't include the compute power. So we're giving you free compute power. So here's, I just hit it under 10,000 compounds, and you can do that for free. So this will launch, and you'll get the results, and I'll show you what the results kind of look like. Here's a result for you. I screened thousands of compounds and got these results. So the lower the score is, the better. This is the potential compound that binds to this protein, and it gives a score, and the lowest score is the best because you're minimizing what's called free energy, which for potential drug or molecule interaction is what you're looking for. So in any event, that's what that is. I'm also developing a potential casino, and that's called monk.gg. Feel free to join Monk and play. It's a lot of fun. Casinos seem kind of lame. You might think that that's not something that I would be involved in. It doesn't seem revolutionary. But I actually think that there's a lot of things you could do in innovating in that space, that this is not just some dumb game. In fact, one of my heroes is this guy, Elwin Berlekamp, who helped create a hedge fund called Renaissance Technologies. He was a mathematician who passed away. He was at UC Berkeley. And a lot of great mathematicians loved games. So one of my favorites was a guy named John Conway, who invented, it's not really a game, but it's called the Game of Life. And so behind games, there's an enormous amount of mathematics. And that's what interests me. And I've thought about how do you create games that are more fair, more interesting, and more mathematically sound. And I think that, okay, this guy really wants to attack. I have to be careful. Oh boy, this is no bueno. So anyway, Conway's Game of Life changed my life when I was a teenager and I heard about it. John Conway died due to COVID. In any event, people like Berlekamp, who revolutionized finance with Renaissance, but also different really esoteric, not esoteric, but important parts of computer science and math, also were fascinated by games. And there was another great mathematician who passed away named Martin Gardner, who, I'm spelling his name wrong, who has basically popularized math by writing the scientific
Scientific American column. So anyway, math and gaming and probability kind of go hand in hand, and to me they're very important, very interesting. How do we make games that are fairer? If you look at the recent Powerball, to me it's a disgrace. I think that the idea that inevitably mostly poor people go play Powerball for hope at becoming rich is insane. And I think it should be outlawed, to be frank. I think there's a way that you can actually have a zero-sum, zero-edge, house-edge game and still have success. I just traded my good bishop, which was not a good idea maybe. But now we're just playing with knights, which are kind of... 2 knights versus 2 knights and power pieces game is a little weird. We'll see how this goes. All right, where are you going? I wonder if this guy knows just how many people are watching the chess game. Okay, you can do that. Watch queen a3. Nope. Close enough though. Give me that. Now give me that too. One of the best ways to get your chess score rating up is to talk shit against your opponent. The problem right now is that my opponent has no clue that I exist. Oh, did you fuck up? Yes, you did. Yes, you did. That's how I play in Washington Square Park. And my chess rating skyrockets because the people are like, man, this white boy's really, really talking shit. Yes, I am. Because I'm like that. I gave you 2 minutes. I'm explaining crypto, and you're still losing. Stupid mother. Okay, let's see here. I need to come up with a win real quick. Real fucking quick. Here we go. Oh, I got something delicious for you. Knight c5, knight d7. Maybe queen c7. I got a minute and 11 seconds. Okay. That's fine. Do your thing. Whoa. Did not expect that. Okay. Right. Right. Fuck, I wish I had more time. What do I do? Takes. No. Fuck it. 38 seconds. Oh yeah. Okay, here it comes. Queen takes h3. I might be fucked. No, not queen takes h3. He can't do that. Oh! Game over! Come on! You motherfucker. Yes, there's only one move. What? There's more than one move. Fuck. Alright, if you want to do that, you can do that, but... It's not what I would do. Oh no, you didn't. Now you're just fucking... Now you... Shit, motherfucker. Okay. Shit. Come on. You know what, I'm gonna wait. I'm gonna wait since you didn't resign. I'm gonna wait. Stupid. All right, thanks for watching, everyone. I gotta go.